Joining me today is Phil Streible, Chief Market Strategist at Blue Line Futures. Phil, welcome back to the show.
Yeah, thanks for having me on, David.
Tumultuous times we're seeing right now, geopolitical-wise, but the markets for the traders are just ripe with opportunities. We're going to start with the oil markets first. $93, I'm looking at crude, almost at $100 a barrel. I think you've been calling for $100 a barrel for quite some time. You've been long oil. What's going on with the oil markets?
You know, when you break down the numbers and you look at what the situation that the U.S. is in conjunction with what's going on with Russia, we're really at a disadvantage. And also oil prices have nothing but upward momentum from here. Look at the only defensive measures that the U.S. can do to bring oil prices back down. They can only release from the SPR, which has been discussed again, and it is not advisable because we're already at very low inventory levels. And also we can negotiate with Iran over the nuclear agreement in order to get them to pump out excess oil and relieve some of these supply constraints. So I just don't think that those are two great options on the board. You look at U.S. production, it's still about 10% below the production we were having before COVID had hit. And then Russia, they're a major producer of oil. They produce 9 million barrels. What's to say that they don't start sidelining and sending some of that oil over to China and other areas that are embracing their situation? So I think oil, its volatility is going to be here to stay. I think you buy breaks on oil, you get down into 87, 85. I think those are good levels for core positions to try and ride up to the $100 mark.
Well, help me understand the supply situation here, Phil. A lot of analysts I've spoken to and I've read online have spoken about the supply crunch that may come as a result of a potential Russian invasion, hence the rise in oil prices. Look, I understand the concept of a supply crunch in situations like the Gulf War, for example, or the invasion of Iraq. Those are, oil-producing nations that basically get crunched if they're invaded. But now we're talking about a major oil producer that is the aggressor. Why would the supply situation in Russia be affected by this situation?
Well, what they would do is they would divert their oil instead of selling it into, the current export structure that they have. They can easily make agreements with other countries to buy that oil, like over to China. So it would, and also they can take off some of that oil. They can hold back. There's no reason for them necessarily to sell. They have too many other key commodities that prices can drive up on. You look at the U.S., our demand is continuing to increase. And especially at the end of March, they're supposed to, end of February, beginning of March, we're going to lift all these mask mandates. People are going to have a new sense of relief. They're going to travel. You're already seeing travel stocks that are reporting record earnings. The demand is there. The supply isn't there. And if you get any kind of, say, disruption to exports from Russia, that's also a tailwind that could push prices higher.
Okay. It seems to me like Russia doesn't need to invade Ukraine then to push up oil prices. All they have to do is what you just said, which is to divert their supply elsewhere, or even just cut back on their production to boost up the price of oil, right?
Yeah, you're also going to see with that Nord Stream 2 pipeline halted, which affects mainly natural gas, you're seeing, energy demand. People are out there trying to secure any type of energy they can, especially heating related energies. So we really believe that, tailwind for crude oil on up to $100, it's all built in there. It's built into the story right now.
You don't see U.S. shale and gas producers upping their production in response to this crisis?
Oh man, that would be so difficult. Not with the current political setup that we have in the U.S. They are just so green energy over here that you're going to get no CapEx spending into building these production levels back up. Remember, they shut down the Keystone pipeline. I mean, they do not want to create oil in the United States. It is dirty. It is looked at as bad for the environment. And this political regime that we have right now is pro-environment. So we'd rather have Iran fire up their refineries, which I'm sure are fantastic, and all green energy and everything. And they'll solve the problem here with the supply side.
That's right. Well, good point. But looking at it now, Phil, As a trader, how are you analyzing this situation? How far could Russia potentially go, in your opinion, and what's that going to do to oil? And we'll talk about the other commodities in just a minute.
I mean, it doesn't necessarily seem like a long-term conflict because it's controlled by these Russian separatists that seem to want to join Russia. So this is really just a big land grab that's causing a lot of political headlines. And I totally understand it. So you're going to look and you're going to see continued focus on the sanctions that come out and then how those impact, the key commodities that are out there. Remember, you look at Russia, they produce 6% of the world's aluminum. Well, if we hit them with tariffs, they might not export as much aluminum, or they might increase export costs on there. And you can already see aluminum, which is at record highs right now, continue to move higher. And there's a number of other commodities out there that are just like that.
Yeah, okay. So let's talk about these other commodities. Oil is obviously one of them. So strategic metals, commodities, hard or softs, what else are you looking at?
So, obviously they're the number one producer of palladium. They produced 91 metric tons back in 2020. We don't have the 2021 figures yet here. You start to see these mass mandates drop. You see people come back on. Toyota comes back to their assembly lines. That was announced this week. We've seen platinum prices already shoot up about $100 in a week. Palladium right now has had about $100 range today on here. They are the number 2 producer of platinum, number 1 producer of palladium. They are the number 3 wheat producer. Look at a chart of wheat. It is broken out to the upside. It is up about 4.85% here today as of this recording right now. And it is blowing away all the other softs grains that are out there. So, a lot of these commodities, they produce 3.5% of the world's copper. With EV demand increasing, copper is like one of the main components of that, all the wiring that's in there. And they produce 4% of the world's cobalt, which are used in those batteries for EV. So Russia is a very, strategic country when it comes to commodity production, commodity exports, and the direction that the global economy is wanting to go. Those key commodities are all very relevant.
But again, Phil, help me understand here the situation. Suppose they do move into Ukraine either through direct military action or through just willingness from the Ukrainians' part. How's that going to impact their supply chain of those metals?
The disruption of them, they might halt on, like if you see, the Black Sea, if that gets inundated with military vessels, the exports of wheat from Russia are going to stop. And if that stops, the demand continues, it outstrips the supply that's out there. They might hold back on exports on any of these. I mean, that is their one negotiating tool, is that they have all these different commodities and they produce these commodities. They can easily hold back or send to other places. You can renegotiate contracts with different countries and form new allies because of, your strategic commodities you produce.
All right, let's get some of your price outlooks then. Let's start with oil first. So we're at $93 on the WTI today. How far can we go?
We saw Brent crude oil, within striking distance of $100 today.
Yeah.
At $99.50. I think that easily WTI could match those numbers. So some analysts out there are going, if there is a full conflict, 110, 120 easily. There's $5 to $10 in geopolitical risk premium right now in the oil market.
Suppose geopolitical tensions die down or simmer down in the region. Do we still have macro forces to push oil continuously higher? I've heard from some analysts that the impulse of growth around the world is now slowing down. Is that true?
So economic growth is slowing down. I don't think consumer demand is not slowing down. I think consumer demand will continue to outstrip supplies. All the economic data has already peaked. Like all the, the Yeti microphones and the Zooms of the world and the laptops and all these things, video game demand, that's all peaked because of, COVID. And as you relax some of those, so all those earnings and revenues are all decelerating. That's why we're bearish on the stock market. But pure demand for oil, I think, will definitely be above pre-pandemic levels into this first quarter.
I see. Okay, and palladium and platinum. So huge run in both of these metals already. Is it too late to get in now?
Here's the other thing too. When you get these geopolitical tensions, they tend to attract geopolitical euphoria behind them. So people are constantly buying the tops, selling the bottoms. So you want to be patient. Like commodities like platinum, I wouldn't be surprised if we see the tensions ease, that geopolitical premium come out of the market. And that's where you'd want to buy a dip on that. So, 1050 on platinum. On palladium, you want to be closer to 2,300 or below. Gold, for instance, that one could have $20 to $40. Most of the gains this year were made up all last week and into this week, and it's directly tied to geopolitical risk. So, be patient on these commodities. Don't chase them by any means.
Speaking of commodities, let's talk about gold. Gold and the US dollar have both moved up since the beginning of February. I'm guessing because they're both safe haven plays. Gold, can we see $2,000 soon? We've hit 1,900 last week, I believe. So we're within striking distance of that critical threshold, psychological threshold.
We could definitely see a move up there. Now, you've already seen, if you look at nowcast models that look at and price in economic growth throughout the year, and also the number of rate hikes that the Fed has baked in. It was 7 rate hikes. Now coming in today, it's only 6 rate hikes. We anticipate this trend continue. The Fed is tightening into an economic slowdown, which makes it very dangerous. And this new geopolitical uncertainty could also weigh in more. So where it could be the 6, we could go all the way down to 4. So I think that investors are chasing more hard assets. They are liquidating these, frothy, high growth, high beta type investments. Look at the NASDAQ, terrible, down 15% since its cycle high. Russell down 15% from its cycle high. Bitcoin, remember Bitcoin was the safe haven. Oh my God, this is the greatest thing since sliced bread. It took 26 ounces of gold to buy 1 Bitcoin at the start of the year. Now you only need 19, and that's breaking out. So Bitcoin is losing its luster right here and formed a big lower high on the charts just recently.
Okay, let me give you a bearish counter argument to gold, and I want to see how you respond to this. Geopolitical tensions, some say, are just a temporary tailwind for gold. They're not to be sustained. In fact, geopolitical tensions in the past have only pushed gold higher for a short amount of time before that dissipates. Suppose we do have tensions de-escalate in Eastern Europe. That's not enough to sustain gold to go much higher. We've got a lot of pressures on gold, a potentially rising U.S. federal funds rate. Nominal rates are going up. Real rates might be going up. The dollar might put pressure on gold. So we're going to see gold push all the way back down to as low as 1,600. I've seen in some reports after this whole crisis rolls over. What do you think?
You got to tell me that guy who's got 1,600, because I'll buy the gold off him when it gets down there. So, okay, great. Geopolitical tensions, all this, it's over with. Russia and Ukraine, the president, they shake hands, they go back and sing Kumbaya. Gold falls $40, $50, even goes back down to 1,800. That's where we're going to step in and buy it. That's why I'm saying don't chase gold at these levels. The geopolitical tensions generally ease, and this is the euphoria right now. But I'm telling you, if gold prices came down to that level, it would be matched by a ton of buying out there, because the economic state of not only the US economy, but the global economy, all these central banks are tightening into an economic slowdown. This Russia-Ukraine thing is just accelerating it. And the number of rate hikes will decline, just like they are right now. They went from 7 last week to 6 right now, and they will continue to go lower. And I'm telling you that the Fed is going to cite financial uncertainties in the markets, and that's why they don't do that. The dollar index, it's going to be perceived as a safe haven, and the dollar and gold have been traveling up together, just slow and steady here just recently. So I wouldn't be too concerned. Look, Europe, they were going to raise rates. there is no way in you know what that they are going to raise rates now with all this nonsense going on. So that will act as a boost to the gold market. And I think some of I think that yields already peaked too, like two and a quarter on treasuries. I think that's going to be the top of it. I think they'll only start to come down from these levels.
Okay. So your gold outlook for the year?
I mean, 2000 is I think that's a mouthful to say. I think that you would need continuous stagflation, deflationary environment in order to get that 2000, which is not, I'm not saying it's possible, but I think realistically, gold has been so range bound that you continue to trade the range. Now, the breakout that has occurred here has happened on geopolitical tensions. So if it does come off, we're going to trade back into that range, obviously. And coming up with a year-end price target, I don't know. It's too tough to say. 1950. I'm just throwing darts now at the wall. So I can't give you that. I would just say that on gold.
I'm just trying to gauge your sentiment here. Are you really bullish? Are you kind of like neutral? Because I bet it says you're neutral right now. Range bound is kind of neutral, right?
I want to own gold in my portfolio and for my clients' portfolios, but at the right price. And also look at silver. Look at a chart of silver. Silver is not broken out. It's trying to, but the chart pattern is different from the gold market. So, I don't know if it's a tail wagging the dog or something is going to happen there. It just got me a little bit hesitant to jump in with both feet in the deep end of the swimming pool, going after gold and silver right here.
Last point, and then we'll close it here. On Bitcoin, you mentioned Bitcoin. I know you trade some Bitcoin on yourself. Listen, Bitcoin has been moving in tandem with like tech stocks, for example. It's just trading like a leverage play on the NASDAQ. And you know how that's worked out because tech stocks, risk assets have been hammered by all this geopolitical talk. So Bitcoin's not doing so well. What's your outlook here? Can we see a recovery or...
On the NASDAQ, over 50% of the NASDAQ stocks are down 50% from their recent, November 19th high when that market peaked. So you look at Bitcoin, Bitcoin does operate like a high growth, high beta. You had it shoot up to 44,000 like last week and all these people were chasing it. People were calling me about buying and everything. And really, I think it was when they said in Canada something, I might be misinterpreting it, but it said that like basically they could seize your bank accounts and things like that. I think people were buying Bitcoin and alternative cryptocurrencies on that type of scare. Now that those have died down, Bitcoin does not operate well back tested in deflationary environments. Or it does okay in stagflation. It does really well in reflation. But then again, you could throw a dart at the board, hit a tech stock, and you'll be chasing it all week long. So I don't have really a price outlook on Bitcoin, but I mean, I would not be surprised to see sub 30,000 say this year. And, if they announce some things like that on the US that they were gonna seize your bank account for donating $50 to the Republican committee, blah, blah, blah. I guess I would have to move some funds out of my bank account and buy a cryptocurrency like that.
Well, here's the thing now in Canada, they didn't just announce they would possibly seize your bank accounts if you're tied to the trucker protest, but the RCMP has blocked transactions on certain crypto wallets on Canadian crypto exchanges tied to those people in the protest. So not only are they capable of seizing or freezing your bank assets, but they're also capable of stopping you from making crypto transactions on Canadian exchanges. Obviously, if you have US dollar on bitcoin.com or Binance or whatever, they can't do anything about that. But yeah, if you're a Canadian, tough luck for you on cryptos and your bank accounts.
I guess you got to start hodling gold and you got to start getting physical gold and silver again. So
maybe that's the way to go.
That's it.
Yeah, Phil, great thoughts as always. Thank you for coming on Kitco. Thank you for all the work you're doing for us, and I'll look forward to speaking with you next time.
Take care, David. Thanks for having me.